On this video, we're going to be talking about breaker blocks, order block, and mitigation block here. I'm going to be going deep into the understanding of this block that when you see them on the chart here, you recognize them immediately. So we're going to start with an order block here. Now, for you to clearly or deeply understand how to mark out your order block here, it is very important you understand the structure of the market. If you're still struggling with structure, check my previous video where I talked about market structure and SMC and all of that. So we want to understand where our structure is heading to here. If we have an uptrend then structure just like this, we now clearly understand exactly where the market is going to here. Then we'll understand that this zone here, our last bearish or bullish, our last bearish candlestick before the impulsive move that broke structure is where we consider to be an order block level. This is the zone we consider to be an order block level. It's a zone where the institution just leave a footprint. So they still have pending orders there. And when the price retraces to that level, it's just like filling all the remaining orders and you just continue going in the initial direction. So this is just how to understand a breaker block. I'm still going to be showing you guys how to properly mark them out on your chart here. Now for the breaker block, this is for the order block. The breaker block is quite different. For a breaker block, we want to already have a trend, a moving trend. So if let's say we have a downtrend like this, a market that is currently just selling to the downside, just like this. Now this zone is considered to be a breaker block. This zone here is considered to be a breaker block in the market. And as the price continues to move downwards, the price might, if this breaker block is high probability, the price will just go respect the breaker block point and bounce all the way down to continue in the initial direction. Now there are ways to check for high probability breaker blocks or other blocks, which I'm just going to be talking about, but this is just basically how to mark it out. I'm still going to be showing you on the real chart. Now for mitigation block is quite different here. Mitigation block is like when you are seeing a block inside another block. So let's say we have a trend like this that created a uptrend, downtrend. We have something like this, then we have a retracement all the way to this point, and all of a sudden the market did this, and the market started breaking all the way up. Now if you notice what we have here, we have a structure inside another structure, and something like this would be considered a mitigation block. So what you're trying to say is that because there wasn't a sweep in structure here, so if this price is to just continue going back up from there, you should just go respect this mitigation block that we have and continue doing this thing. So for the other block is the last low. For the breaker is just the flow of the market, the initial flow of the market, and the mitigation block is just when we have a certain flow of the market, but liquidity is yet to be grabbed or taken out. Unlike when we have something like this. If you see this now, it's different from when we have maybe something like this, low, high. Then we swept liquidity, and before we started to bounce. So we swept liquidity, like we initially change an entire structure, but some of the times you will not see the market change an entire structure by sweeping liquidity, where you just start to form another entire structure and go. So we just consider this most times to be mitigation block. So let's go to the chart and see how we can identify these blocks here. Let me start with Ethereum. So I took this trade. This was the last trade I take on Ethereum. So if you notice what Ethereum have been doing here, let me take all of this out. If you notice the movement in which Ethereum has been giving us, it has been giving for a series of uptrending flow of the market, creating series of highs and lows. So we had this low over this high at this point, this main high. We had this low over here. Then we had this expansion to this zone. We had this low. Then we had the market breakout again and give us a new expansion at this point before we had this low. So if you see how we already can clearly identify how our price are moving here. Now, understanding this market, the flow of the market is this is where it's clear to say our other block, our breaker block has been located somewhere around the zone. So the price just respected the breaker block we have here. You can see this week, I'm not including this week to it, just the body. So the price respected the breaker block and continue moving back up. And I also took this trade here. I was able to catch the trade from this breaker block zone and just target the high. So this is just like a clear example of taking your trade from the breaker block and moving forward. Now, there is a additional reason why I was more convinced about this breaker block here. It was because of the market left there and give us this displacement in which we have here. So if you see how the price left that zone, it left that zone aggressively. So I like to mark a point of interest where I see that the buyers or the sellers left that zone aggressively, leaving me with kind of fair value gap also. So if he left that zone aggressively, I have more conviction in that zone. So I'll just mark out that zone like that. So that was one of the reason I took this trade because of how the price left this zone aggressively. So you want to look out for trade breaker blocks in this manner. It just works better when price leaves that zone aggressively. And this is for breaker block. Let me see, maybe I'm going to see an example of other blocks. I think I will see on BTC, yeah. So clear example on other blocks would be here on BTC. If you see what we have at this point and how price has been behaving, we can see that the prices of this chart now is giving us a series of highs and lows. Now let me take all of this out so I'll be able to do that effectively. Now from this point in which we had that high, we had a other block at this point. Now why is this other block high probability for me? Because I took the trade. This other block was high probability for me because of how price left that zone aggressively. So from this point, you see how price left that zone aggressively to take out this high. So this just gives me more conviction on these other blocks. Once price leave that zone aggressively and take out the high, you just have more conviction on the other block. This is telling you that okay, institutions are stepping in and they place a lot of orders, but they weren't all filled. So they will come back to just get the field balance before going back up. So this kind of other block here are high probability other blocks, and you want to be watching out for them to take your trades from them as well. And if you see what happened after the price got to that high, it went back down again and respected again from another other block point, which is, let me see, maybe it'll be clearer on the respected from this OB level in which we had here. These are other blocks level. I think this would be, let me check how it appears on the 2 hour. Okay, this is it on the 2 hour. So I'm marking the body because it has a big wick. So this would be the other block here. And the price reacted from there again. Now if you see from this point here, we had price again reacted after it came to this other block zone. It reacted, take out this high again and went all the way up. If you look at how price left this point now, you see that price broke out from this aggressively, leaving us with all of these levels in which we have here. I'm still going to see on which time frame it's more clearer. See how price bounced off that level again. This is the other blocking which we have there, which is the last candlestick before the impulsive move we have to the upside. Now price came all the way back down again and reacted off the other block in which we have there. And what do you notice again? You notice how price from that point, price just bounced off again all the way to take out this high. Now where's the new order blocking which we have in this market? This is the recent order block we now have. This is the recent order block we now have. So if price is to bounce off as well, although there is a difference between how aggressive the price moved from here and this place, this is where we'll be looking forward for price to bounce off again and continue going in the initial direction. So this is just all about other blocks here, how to mark out other blocks in the market. Then I think let's see on mitigation block. If you see what was happening over here on Solana, we had this low, we had this high, we had this low, we had this high where you take out this liquidity for what the markets changed in market character over here. Now at this point here, this is where we have our other block. If you see the other block here, this is just a good example of other block. This was the last candlestick before that impulsive move, and you see how price left that zone aggressively. So this is an other block of the market here. Now immediately price reacted from that other blocking which we have there, and it bounced back down. If you pay attention, you'll see that this is the breaker we now have because we had a sweep in market structure. So this is a sweep now, and this is now a breaker. This will be the breaker block point. Now you see that market swept this recent low here. So this confirmed this now as a very valid breaker for us because we have a sweep and this is our breaker. The price left that breaker zone aggressively. So it just makes sense that the price will just come all the way back down, respect from that point, which is the breaker block, and sell all the way again. Immediately the price went back there, it swept this low again and respected from the other block before bouncing all the way down. Now immediately it bounced down to this point here. You can see what the market started doing. Immediately it bounced back to this point. Now look closely, you understand that we didn't have a sweep. The market just changed structure without giving us any initial sweep, but inside of this leg we started to see this movement, this low, this high. Now for this to continue, we have a mitigation block here, and that's where this block comes about. All of the blocking which we have in this point here, this is where this block come about. We're going to see it on a better time frame, and the price just started to go down and continue going up from there. So you can see now this is a mitigation block because there was no initial sweep. The price just respected from the mitigation block and continue going all the way up. So you want to be able to understand all of these things here. Let me see, maybe I have another example of a mitigation block.